What's going on, guys? Today's article is brought to you by Reuters. The dollar is steady as China disappoints. Traders eye Jackson Hole meeting. China cuts 1 year loan loan prime rate by 10 basis points versus 15 basis points expectation. The dollar yuan exchange rate up beyond 7.3. Aussie and Kiwi are vulnerable. Yen on intervention watch steady at 145.37. The dollar was firm through Asia trade on Monday following 5 straight weeks of gains as investors looked ahead of the Federal Reserve Jackson Hole Symposium for guidance on where the rates might settle when the dust for this hiking cycle clears. The US dollar made a gain of 0.7% on the euro last week, inched ahead on the yen, and surged by more than 1% on the antipodian currencies as US Treasury yields leap in anticipation of interest rates staying higher for longer. In Asia, the Australian dollar at 0.6406 and the New Zealand dollar at 0.5919 were pinned uncomfortably close to last week's 9-month lows after China's rate cut disappointed markets worried about a stalling economy. China cuts its 1 year benchmark lending rate by 10 basis points and left its 5 year rate unchanged against economists' expectations for 15 basis point cuts to both. The yuan slid to the weak side of 7.3 per dollar despite a firm fixing of its trading range by the central bank. It last traded at $7.3070, though it has so far kept off last week's low beyond 7.31 that had brought state banks into spot markets in London and New York hours as buyers. The antipodian currencies often function as a liquid proxy for the yuan, owing to the region exports to China and are doubly vulnerable as the rate outlook drives up the greenback. The Australian dollar will continue to underperform this week in a view, strategists at the Commonwealth Bank of Australia said in a note to clients. We consider there is a growing risk that the Aussie dips below 0.60 before the year end. It will likely take a big Chinese stimulus package focused on commodity-intensive infrastructure spending to turn around the downtrend. Like the yuan, the yen is also on intervention watch, having fallen to levels around which authorities stepped in last year. It was steady at 145.37 a dollar in Asia. The euro held at $1.0880, sterling hovering at $1.2739. The Swiss franc was just above a 6-week low, hit last week at 88.20 per dollar. Apart from waiting in vain for news of stimulus in China, the upcoming Jackson Hole Symposium, where Fed Chair Jerome Powell is set to speak on Friday, is market's major focus and may set the direction for US yields. The 10-year yields rose 14 basis points for the week and touched a 10-month high of 4.328%, within a whisker of a 15-year high. 30-year yields rose nearly 11 basis points to the highest in more than a decade. The theme this year for the annual gathering in Wyoming is structural shifts in the global economy. Two things that may come across are decades of ultra-low rates backed by ultra-low inflation may be over. Venshu Varathan, head of economists and strategy at Mizu Bank in Singapore, and global policymakers may prefer to maintain restrictive real rates for a while, thereby keeping rates from volatile inflation alive. Bitcoin, which was battered to a 2-month low last week as rising US yields and China's slowing economy drove a wave of selling, nursed those losses at 26,054. Euro dollar was trading at $1.0880, yen at 145.3850, euro yen 158.19, dollar Swiss 0.8821, sterling $1.2737, dollar to the Canadian dollar $1.3543, Aussie dollar 0.6404, New Zealand dollar to the dollar 0.598. There you have it, guys. The dollar is still pretty much strong, but we have to go and retrace towards and test our last support at 101.500, and then from there it's on to the bulls, and so is Nasdaq. It's in a retracement as well, going higher. We might even see the levels of 1500 being touched again before continuing with our actual trend. So all in all, I think this week the markets are looking quite bullish. Yeah, guys, let's go out there and make a fucking killing.